Goodwill brings to you the weekly share market update dated the 17th of August, 2024. Talking about the corporate segment, we have Sun TV Network shares plummeted over 10% to 823 rupees each on August 12, following a disappointing April-June quarter performance. Brokerages expressed their dissatisfaction with the results, downgrading the stock due to high valuations and concerns over future earnings potential. Kotak Institutional Equities downgraded Sun TV from add to sell, setting a target price of 830 rupees per share. They highlighted the stock's steep valuation amid increasing risks from OTT platforms and potential industry consolidation. Given the sharp rise in the stock, the core TV business is now trading at 12x September 2026 earnings, after accounting for Rs 9,100 crore valuation for the IPL team and excluding Rs 8,550 crore in cash, September 2025 they noted. Sun TV's core business underperformed in quarter one, with ad and subscription revenues dropping 5% and 2% year-on-year, respectively, due to the impact of cricket and general elections. Consequently, the company's net profit declined by 6% year-on-year in quarter one financial year 2025, with revenue from operations down 3.1% year-on-year. On the operational front, the company's EBITDA fell 9.9% year-on-year in quarter one financial year 2025, with EBITDA margin shrinking sharply by 430 basis points year-on-year to 54.8%. Despite these challenges, Sun TV shares have risen over 15% this year, outperforming the Nifty 50's 12% gain during the same period. Shares of Suzlon Energy hit 5% upper circuit to scale a multi-year high of 80.36 rupees on NSE on August 12. The multi-bagger stock, which crossed the market capitalization milestone of 1 rupee lakh crore last week, has clocked returns of 47% in just the last 1 month. The stock is trading at its highest level since March 2010. Suzlon shares are trading higher for a fourth straight session after the global renewable energy solutions provider executed definitive agreements for the acquisition of a 76% stake in Renom Energy Services Private Limited, in 2 tranches, from the Sanjay Godawat Group. Note that Morgan Stanley has issued an overweight call on Suzlon, with a target price of 73.4 rupees per share, which has been surpassed already. According to the international brokerage, the acquisition of Renom Energy Services marks a strategic entry into the multi-brand operations and maintenance services sector. According to Prabhudas Lilladher, with a higher low formation pattern visible on the daily chart, Suzlon Energy stock has regained strength with next potential targets of 82 rupees and 98 rupees levels expected in the coming days. With maintaining the near-term stop loss of 71 rupees, one can hold on to the stock with much upside potential visible and further gains can be anticipated, it said. JM Financial has maintained its buy rating on Suzlon stock. The company is likely to leverage Renom for capturing 32 gigawatts non-Suzlon OM's market, 10 gigawatts immediate opportunity, which is growing with India's target of 100 gigawatts wind energy capacity by FY30. The acquisition will expose Suzlon to new sites, potentially benefiting from emerging repowering opportunities, it noted. We believe the acquisition represents a strategic move by Suzlon, enhancing its capabilities, expanding its market presence, and creating value, the brokerage said. Shares of DOMS Industry surged more than 4% to an all-time high of 2,545 rupees on August 13, following a robust performance in the April-June quarter. Since its listing 7 months ago, the stock has more than tripled, soaring over 200% from its IPO price of 790 rupees per share. The stationery company reported a 49.5% year-on-year increase in net profit, reaching 54.3 rupees crore in quarter one financial year 2025, compared to 36.3 rupees crore in the same period last year. Consolidated revenue from operations rose 17.3% year-on-year to 445 rupees crore in quarter one financial year 2025. This growth led to a 17.3% year-on-year increase in EBITDA, reaching 445 rupees crore for the quarter ending June, with margins expanding sharply by 300 basis points to 19.4%. In quarter one, Scholastic Stationery remained the company's largest product category, contributing 43% to revenue, followed by Scholastic Art Materials at 25% and Kits and Combos at 8%. Santosh Raveshia, Managing Director of DOMS Industries, commented, "The start of financial year 2025 has been promising, despite challenges from extreme weather conditions, particularly in North India during the June quarter. We continue to see strong sales growth and improved margins, reflecting our dedication to delivering exceptional value to our customers." In other news, the company's board has acquired a 51% stake in Skido Industries, which is currently raising 1 rupee crore through a rights issue to address working capital and capital expenditure needs. Shares of recycling player Gravita India are higher by 5% after Motilal Oswal initiated a buy with a potential upside of nearly 24% and said India's expanding recycling industry will have a positive impact on its business. Gravita India specializes in recycling lead, approximately 88% of revenue in FY24, aluminium, around 8%, and plastics, about 2%. The company also provides turnkey solutions to clients to set up recycling plants. Gravita India operates 11 manufacturing facilities worldwide, 5 each in India and Africa, and 1 in Sri Lanka, and new facilities are under development in Oman and the Dominican Republic, the company has said. Analysts believe these strategically located facilities offer a competitive advantage by being close to both consumption and procurement areas. Looking ahead, analysts at Motilal Oswal anticipate Gravita's earnings to grow at a compounded annual growth rate of approximately 31% from financial year 2024 to 27, supported by revenue CAGR of 26% and improving adjusted EBITDA margin. Gravita currently trades at 31x and 23x financial year 2026 EAT financial year 2027 EEPS, with expected return on equity, ROE, and return on capital employed of 30% and 25% respectively by financial year 2027 E. Analysts say the company is well positioned to benefit from India's growing recycling sector, given its established position and competitive advantages. Key risks include potential supply chain and logistic disruptions, adverse regulatory changes, delays in new facility ramp-ups, and commodity price volatility where the company has not fully hedged. Shares of RHI Magnesita, makers of special refractory products, rose 6% on August 16 after Q1 financial year 2025 results showed record EBITDA margin, which expanded to 17.5%, helped by recent acquisitions. "We are pleased to report that we have delivered the highest margins since the completion of acquisitions over a year ago," said Parmod Sagar, MD and CEO of RHI Magnesita, adding that while end-user industries face challenges from cheaper imports and rising costs, RHI Magnesita sustained strong margins. RHI Magnesita, formerly known as Orient Refractories, had acquired High-Tech Chemicals in October 2022 and Dalmia Bharat Refractories in January 2023. The stock has risen 3% in the past 6 months, underperforming the Nifty 50, which rose over 10% during the period. RHI Magnesita's Q1 financial year 2025 revenue fell 7% on quarter to 878.76 rupees crore, driven by an 8% decline in volume. This drop in volume was due to subdued customer activity, weighed down by an intense heatwave, elections, increased steel imports, and lower exports. The company's net profit for the June quarter came in at 72.88 rupees crore in the quarter ended June 2024 as against a loss of 257.89 rupees crore during the previous quarter. A stronger product mix and a one-time high-margin order boosted gross margins to 45%, up from 43% in Q4 financial year 2024. EBITDA for the June quarter rose 4% sequentially to 154 rupees crore. Knox Wind Limited has moved up by 22.1% this week with a change of 38.51 points. It has traded with a net volume of 215.677 million shares. The share is currently trading at the price level of 212.74 against the previous closing price of 174.23. Meanwhile, the share price is trading above its moving average 173.51, which is a good indication for the stock. The stock has made the highest move to 236.95 points this week. While shares are trading with a relative strength index of around 70.82. Kaynes Technology India Limited has moved up by 18.77% this week with a change of 803.05 points. It has traded with a net volume of 2.866 million shares. The share is currently trading at the price level of 5,082.2 against the previous closing price of 4,279.15. Meanwhile, the share price is trading above its moving average 4,228.93, which is a good indication for the stock. The stock has made the highest move to 5,210 points this week. While shares are trading with a relative strength index of around 77.39. Triveni Turbine Limited has moved up by 16.43% this week with a change of 114.30 points. It has traded with a net volume of 40.17 million shares. The share is currently trading at the price level of 810 against the previous closing price of 695.70. Meanwhile, the share price is trading above its moving average 659.70, which is a good indication for the stock. The stock has made the highest move to 843.95 points this week. While shares are trading with a relative strength index of around 77.14. Nifty has entered positive trend in last trading session. You can go long in Nifty with stop loss of 24,091 on daily closing basis. Nifty would be considered strong till it trades above 24,091 levels. Nifty support levels are 24,309, 24,077 and 23,950. Nifty resistance levels are 24,669, 24,796 and 25,028. Bank Nifty has entered positive trend in last trading session. You can go long in Bank Nifty with stop loss of 49,493 on daily closing basis. Bank Nifty would be considered strong till it trades above 49,493 levels. Bank Nifty support levels are 50,014, 49,511 and 49,217. Bank Nifty resistance levels are 50,812, 51,106 and 51,609.
You can reach us via phone, WhatsApp, or email using the information listed on the screen. Thank you for joining us today. If you found this video informative, please give it a thumbs up, and don't forget to subscribe for more financial insights. And, as always, if you have any questions or topics you'd like us to cover in future videos, leave them in the comments section below. Until next time, happy investing.